Okay, hi guys, welcome to a new video. So in today's video, I'll be talking about your entry versus your exit. Okay, which is more important? Now, before I start this video, I want to clarify that both are equally important. I'm not saying that the entry is more important than the exit or the exit is more important than the entry. I'm just saying which you should focus on more, okay, which is more important. Okay, so let's start off the video by talking about what entry and exit is. So entry is pretty straightforward. It's where you enter. Okay, so for example, price it's here right now, and you enter here. Okay, but when it comes to your exit, I'm actually referring to two things. Number one is where do you exit if you are right? Okay, meaning that you have a profit, and where do you exit when you are wrong? Okay, where's your stop loss? Okay, so as you can see on the chart here, I've just, simulated a position. Let's say you go long here. All right, your exit, maybe you put it below this low, and this is your take profit, right? So in every single trade, you should always have a entry. I mean, if you enter a trade, obviously you have an entry, and you should have an exit strategy, right? Exit strategy for when you are right and when you are wrong. Okay, this is very important. You don't just want to have a exit plan when you're right. You want to have the exit plan when you're wrong so that you can cut your loss if you are wrong. Okay, that's very important. Now, let's go into the crux of today's video, which is the entry more important or the exit more important? Okay, now the answer is actually exit. Okay, why do I say exit? Because you can have a bad entry. It doesn't really matter as long as your stop loss is placed correctly, meaning that you don't put your stop loss too tight, you don't get whipped out of the trade. Okay, your entry, honestly, it doesn't matter if you buy a bit higher, you buy a bit lower, as long as you get your stop loss right. Okay, so this is important, right? Your exit, where you exit the trade is more important than where you enter. Okay, there are a lot of new traders who they want the perfect entry. Okay, in fact, I was coaching some friends of mine, and they always want a perfect entry, and there I was telling them that, hey, look, entry is not so important, because honestly you can just compensate for your bad entry by using a smaller position size. Okay, let me just write this down and go into more details. So basically, you can compensate for a bad entry with a smaller position size, okay? But you can never compensate for a bad exit. Okay? So what do I mean by this? Okay, let's say your perfect entry, or so to speak, you wanted to enter at this level here, for example. Okay, and perhaps you were sleeping, perhaps you were busy, or you forgot about trade, and by the time you saw it, price is here. Okay, price is over here. So you're like, oh, I should have bought it here, but its price is here. But you can still enter and put your stop loss below and go in with a smaller position size. Okay, provided that your risk to reward still makes sense. Okay, there's a caveat. You want to make sure that your risk to reward still makes sense. You don't want to be risking 40 pips to make 20 pips. You don't want to be chasing the market. Okay, so if the risk to reward still makes sense, then you can still enter, and because you have a bigger stop loss, you can compensate for a bad entry with a smaller position size. Okay, in fact, you should always be sizing your position according to your stop loss. Okay, if you do not know how to do this, I have a video on how to do this, so just check out YouTube channel. I have a video about how to position size your trades. Okay, basically the core idea is that if you have a trade that is risking 20 pips versus a trade that has a risk of 100 pips, then you want to take a smaller position for the 100 pips stop trade, and a bigger position for the 20 pips trade, because the stop loss is tighter. So you want to position size your positions. Okay, so I repeat it one more time. You can compensate for a bad entry with a smaller position size, but you can never compensate for a bad exit. Okay, think of it this way. Let's say you were to buy it over here and price goes up. Okay, price goes up to here, and you do not apply any trade management. You do not take your trade. You do not shift your stop loss to break even, etc. You just leave it, and price comes down and stops you out. Okay, you could have made this profit, or at least you could have exited with a break even or a slight profit if you had managed your trade, right? But because you didn't exit properly, right, the trade stopped you out and break at a loss. Okay, so you want to always be very cautious with your exit, right? Not just where you put the stop loss, but also where you put your you know, take profit. How do you manage your trade in real time? Okay, now, if you need some tips for on how to manage your trades, I have a video about trade management as well. So make sure you check that out. Okay. If you are new to this channel, right, I have a lot of videos like this. Okay. I also have a free day trading guide for you. The links in the description. Just make sure you download that. Okay, it's free. You just need to check that out. Download it. You get instant access. No credit card required. Okay. So the last part of today's video that I want to talk about is how do you improve your hit rate as a beginner? Okay, now you are new to trading, and chances are you are not that good at reading the market. Okay, it takes time, it takes experience. You're not so good. So how do you actually increase your hit rate? Okay, now when you are a new trader, you are a beginner, you're still struggling, you want to focus on using a bigger stop loss. Okay, a bigger stop loss. Why? Because when you are new, you are not that accurate. I mean, think of it this way, right? If you just picked up archery, right? You just picked up archery and you are trying to shoot the arrow at the at the target, you are going to suck. This is just the fact, right? You're going to suck. So same in trading, you're going to suck. Your accuracy is going to be sucky, right? You're not going to be good. So why would you use a tight stop loss when you're not accurate, right? It doesn't make sense. Okay, you should be using a bigger stop loss, right? Use a bigger stop loss. Okay, I'll write it down here for you so that you can screenshot it if you want. Just a moment. Okay, use a bigger stop loss. Okay, so now you might say, if I use a bigger stop loss, I'm going to lose more money. Okay, that's not true. Okay, that's not true at all, because when you use a bigger stop loss and you adopt the adaptive position sizing that I mentioned earlier, okay, you will actually use a smaller position size. Okay, make sense? Because if let's say you are risking initially you were having a stop loss of 30 pips, now you're having a stop loss of 60 pips. If your stop loss is doubled, then your position size should be reduced also. So for example, you are trading 30 pips, right? Now I'll write it down for you. Okay. So let's say initially you were risking 30 pips and you were trading let's say one micro lot, which is actually 0.1. Okay. Sorry, one mini lot. One mini lot is 0.1. Micro is 0.01. Okay. Let's say you watch my video and you want to increase your hit rate. What do? You change, revise. Okay, you risk 60 pips instead, and instead of entering the same mini lot, because if you enter the same mini lot, right, your risk is going to be double because you are risking 60 pips instead of 30 pips. So what you can do is you trade 0.5 mini lot, which is actually 0.05, which is the same as actually 0.5 micro lot, as in it's sorry, it's my 5 micro lots, basically 5 micro lots. Okay, so the idea is you want to reduce your position size so that your trade has more breadth, and that also means that you don't need to be so accurate. Okay, when you don't have to be so accurate, this will increase your hit rate because you do not get stop out that often. Okay, then as you get good, right, as you become more proficient, maybe you trade for 3 years, as you trade for 5 years, 10 years, right, and you get very good at pinpointing turning points, you are very accurate, then you want to trade like I do. You want to have a very small stop loss, right? Because the smaller your stop loss, the higher the reward to risk, right? Because if you have a 30 pips risk and you have a take profit of 100 pips profit, that's a 1:3.3 reward to risk. Okay, versus if you risk 60 pips to make 100 pips, that's only about 1:1.5 there about. Okay, so that's my thoughts on how do you improve your hit rate. Okay, so to sum up this video, right, you want to focus on your exit because your exit is more important. Okay, you can compensate for a bad entry with a smaller position size, but you can never compensate for a bad entry in terms of taking profits or in terms of cutting your losses. So your exit is something you want to focus on. Okay, and also if you are new, you're still struggling, I encourage you to use a bigger stop loss and use a smaller position size. Okay, so make sure you check out the other videos if there are some concepts here that I go through that you do not understand. Okay, check out the other videos, and if you are new, please download copy of day trading guide, hit the subscribe button. Okay, and leave a comment below if you have any questions. I'll do my best to address them. Okay, so that's it for this video. Thanks for watching. I'll see you in the next video.